The U.S. dollar is mixed in early trading in the U.S. Today. To kickstart your trading day, we'll go through the technicals that are driving the three major currency pairs: the euro versus U.S. dollar, dollar versus yen, and sterling versus U.S. dollar. Meanwhile, there's lots of balls in the air, including, of course, the Iranian-Israeli conflict and what the U.S. response would be yesterday. Late yesterday, the president said that he would postpone any sort of action up to 2 weeks to allow diplomatic action to take place. We'll see if that is successful or not. We know that European allies will be meeting with the Iranian regime today to try to convince them to come to some agreement as far as nuclear or uranium enrichment and nuclear advancement. We'll see how that meeting plays out, but the bombs continue to fall, and we'll see what happens going forward. No one really knows, but the technicals do show the price action of the markets and the vote from market traders as far as where the price should be. And when you apply technical tools to that, they give you a risk and bias defining levels. So that's what I'll talk about in this video. So let's get started. Now, along with the technicals come volatility, and that is also spurred on by the fundamentals. So you see ups and downs in the euro versus US dollar chart. This is the hourly chart right here, but it is the tools that give us ideas as far as trading bias goes. And in trading yesterday, or actually 2 days ago, the price fell below the 200-hour moving average, and then we held resistance right here in the Asian session yesterday, and that forced the price to the downside. Now, the decline that we saw did stall ahead of the next key target, which would be the 38.2% retracement. It's hard to say that there was a reason for the buy. Maybe you can go back to this high right here as a reason to buy, and it's pretty much for the most part lines up with that the old high right here, which is broken here and moved to the upside. So maybe that was a reason to buy. And when the market came down in the U.S. session, it was a holiday session yesterday, the buyers came in and pushed the price back up toward the 200-hour moving average into the close. In the Asian session today, we did see a move back above that 200-hour moving average right here. That was more bullish, and we saw the price extend above the 100. And since then, we've seen up and down price action, which is indicative of a market that kind of doesn't know what it wants to do right now. What we do know is that the price is staying above the 200-hour moving average, and that's going to be our barometer for buyers and sellers. If the price can stay above, it's more bullish. If the price moves below, it's more bearish, regardless of the news. So just understand that, and you can take away some of the risks that are involved in the markets as a result of all the action that's going on in conflicts and also economic data. And we're going to have Fed officials talking here today. So all that's going to be smoothed away by what the price does in relation to the tools. As long as the price can remain above the 200-hour moving average, bias remains stay upside. If it goes below, it's more bearish. Let's take a look at the dollar versus yen next. And if we look at that from an hourly perspective, we saw the price move to the highest level, going back to this point right here, which was May 29th. So the highest level for June was reached yesterday. In the process, we moved above these highs right through here, which were the highs for the month of June. Again, an arrow, that's this high right here and this high right here, which came up just short of that high. So that's a ceiling being formed right here. We moved above the ceiling, and then we came back down, retested it. By the way, the 50% retracement of this move to the downside is also near that area, increasing the level's importance. And then we moved above, and then we moved back down toward it, and then we fell below it in the Asian session here, right here. It should have sent to price lower toward the 100-hour moving average, but it couldn't quite get there, and we saw the price rebound back up. And as the first stop it went to was this old high right here and found willing sellers. But since then, in the last few hours, I've seen a break above that level. That's increasing the bullish bias. You can say that the 50% retracement, this other level at 145.47 is support area. As long as the price remains above that, that's more bullish. If the price moves below it, it's more bearish. So keep that in mind in the short term for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. I'm looking more at the 4-hour chart for this currency pair. Maybe I'll switch over to the hourly chart in a bit. But you see this floor right here. This floor goes back a number of different weeks where the market had two different lows. One back 3 or so weeks ago, and one earlier this week. We fell below that in trading yesterday, I guess, and on Wednesday. as well. And we tried to staple a level, but the thing that we did in trading yesterday, yesterday I guess, was that we did move back above this line right here and then held support against it. If I get the arrow, I'll show you the point right here. You see that point right there. The market found support against that, then pushed back higher. We got above this swing area, and this other swing area right through here, which is defined by some swing lows and swing highs through this area, through here, where we had a number of different times where the price came down toward that area and either found support or resistance. And we broke above that level. The corrective move that we saw in trading here today off of the retail sales data in the UK came down to the low of that swing area. That level comes in at 1.3461 and found support buyers, and we've since moved back up to the upside, trading near the highs for the day. On the top side, we do have the 100 bar moving average. We also have this swing area up here that is in play at 135.19. Get above those levels, and that's more bullish. Find willing sellers against that level where we have a battle going on between the 134.60 and 135.19. That would how I see it for the sterling versus US dollar. So there you have a look at three major currency pairs as you try to work your way through all the stuff that's going on. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.